Okay, so hello. Go live. This should be working. Okay, hello everybody. Can you hear and see my screen now? Hello. Okay, I think now it's showing. So very sorry for the okay. So very sorry for the hiccups in starting up. I had to change the software for the recording. So let me just check if all is going really smooth. Okay, so I'm going to. Okay, hello everybody. Can you hear and see my screen now? Hello. There's a lot of background noise, so I'm going to. It's showing. So very sorry for the. This should be good. So very sorry for the hiccups in starting up. I have to change the software for the recording. So let me just check if all is going really smooth. All right. So welcome to this basic investment and financial planning webinar, and I'm going to take you through the key things you need to get started in your financial planning and investment making decisions, right? Number one is budget. You need to always have a budget. It's the key thing in starting your financial planning journey. Uh, so personally, my breakthrough in financial planning in personal finance came after I was religiously monitoring my expenses for 3 months, and it was until doing that I was able to see what are the things I spend money on that necessarily shouldn't be, and then I was able to come up with a good estimate of how much to spend monthly. So these are things that just a 15 seconds. Let me just check if the volume is okay. Great. So sorry for that. By my second meetup, all should be good. So it was after I was budgeting that I was able to come up with what were the things that were wrong with my spending habits, understanding the pattern of flow of money into my account and money out. So until you see all of that, what you do not measure, you cannot control, right? And it gives you a good idea of how much you should be spending monthly and then how much you can afford to save or invest. So in tracking your expenses, you can use a lot of tools. There is the Excel based tool. I'm going to drop the link of where you can download this tool on the chat box, so you should be able to maybe in the comment side after the presentation, so I don't disrupt the flow of the presentation anymore. And please, if you have any question, do ask. I am monitoring the chat box. I'm monitoring questions you ask, so the conversations that are going on here. So okay, I'm going to drop the link of this video, this Excel sheet, so you can see, you know, where. Sorry, just trying to check. Okay, all right. So I'm not able to see your questions right now. I'll be switching between this and this, so that way I'll be able to check your questions until I'm able to fix it on the other side of my tool. Okay, so all right. Hope you still all hear me? I'm going to also do one last check here. Okay, so that is confirmed. Okay, great. And I'm going to drop the where you be able to access this file, and equally too you can use apps. You can, this is even much more convenient for those of us who already use a smartphone. For me, that was what I did in 2011. I installed an app on my Android phone, and I was religiously monitoring every expense I make. So it's because it's handy. I'm always with the phone. I'm able to key in, whatever I buy. I'm able to keep records. And luckily for cash inflow, that's not too difficult because you can always check your bank account to have an idea of money that comes in. Luckily, or coincidentally for most of us, you get a lot more frequency of outflows than inflows. So you might just get a few inflow in a month, but the things that you have trouble keeping track of are those little expenses. They're like the little foxes that ultimately destroy your financial health. So this app called Wally that you can download from wally.me even makes it possible for you to snap the receipt, so you don't have to key in everything. So it's highly recommended. But then there are other apps you can try to use. Okay, so again, you can use apps to track your expenses. How then do you do your saving and investment? So how do you handle the saving and the investment part of your financial journey? So number one thing is, don't ever assume that you don't have enough to save. I don't know if you've come across this quotes. It's in dollars anyway, but I've changed it to be in naira. Right? So I think it's even in pounds because it was done many decades, like centuries ago, and it was done by someone, one of those old writers. And what he said was, if you earn £1, so let me use naira. If you earn one naira and you spend one naira one kobo, the it equals misery. You are going to be sad. You're going to have a lot of pains and things related to debt. Your life is not going to go smooth just because you spend a tiny bit more than what you earn. And if you earn really little, so you earn very little, but you manage to spend, even if it's getting to the border of what you earn, but that extra one kobo you are able to spend less than in your income, right? It's it's bliss, it's happiness. You don't get to have some hooks around your neck. You don't get to have unnecessary headache and troubles. And so you find out that you need to first of all understand the level of your income that is stable, and then use that in planning your expenses. Don't go try to live above your means. And when we say your means necessarily doesn't mean that just because you get some money that come once in a while, and then you use that to set the baseline for your lifestyle. If you know that what you spend, uh, your normal income, you know, without putting in bonus and other money that comes unplanned, cannot sustain your lifestyle, then that's what you're looking for when you're keeping track of your expenses. You're looking for those expenses that you can get rid of. So it can be very difficult to spend less than you earn. The trick is to reduce your spendable earning. Pay yourself first. So, and what do we mean by paying yourself first? It means, see if anyone has dropped any question. Okay, I'm going to try to access the question portal from my phone. So just let's see how that will work from my phone. Okay, just give me a few seconds so that way I can be able to know if anyone has asked any question, and I can be just, pardon me that I'm using this new tool for the first time. What I used before, a lot of changes had happened to it, so I had to switch to a new tool. And right now, um, having like a tilting moment now, having to cut my teeth on this new tool, but I'm almost at the section where I can check the chat, the messages you've left. So um, things are going great right now. The it's loading up real fast, and I can be able to see. In the studio, I'm trying to let it show me all the videos, and I can be able to check out. Okay, so I'll maybe keep talking and be doing that on one side. Just pardon if there's a bit of lag in what I'm saying. Then the next thing you want to also keep track of is, don't always feel that your bonus, your windfall should always be celebrated by you want to celebrate that you've gotten some money you never expected, and then celebration for you means spending. It means you having to take friends out, you having to buy something new, you having to go on a vacation. That is the habit that negates your financial planning and your fiscal health, if I can use that word. Because you should start building the habit of celebrating those unexpected income uh, with new savings. When something comes in that you are not expecting, rather than spend it, save it. Okay. And what are the wrong types of saving I see people do? Okay. So I think this is coming up right now. So the wrong types of savings I see people do are saving only to spend, and I think it's because they read too much adverts, and some of these savings platforms don't make things easy for people because they try to give you a reason to save, and the reason sometimes they give you is, oh, you should save up for a car purchase. Don't you like to go for vacation? You can save a little a month, and then that will make you be able to have enough for the vacation. All of these things are helping you to save only to spend. And if you are saving only to spend, you are back to what you were avoiding initially, which is spending all of your money. You need to start learning to save for the right reasons, learning to save to grow your wealth, not to spend it as the money is accumulating. So not to just save so that you can spend in December all of the money on a fancy vacation, or to make some, well, car is not the bad thing to buy, but I'm just saying, you know when all of your savings is just to spend, then that is bad. Okay, you want to avoid that. Okay, and see if this will bring me to the studio. This is okay. So I'll keep on. Then saving in non-interest accounts, right? If you save in, don't ever save or put all your savings in a regular bank savings account. Don't save all of your money in non-interest accounts. Finally, I've gotten to where I can monitor be able to answer your question. So it should come up right now. I've clicked on it. So do not make monthly contributions. There are some people in their office that have this group where they have this community like a cooperative, and they are all saving, and so and it helps them to have this LD savings lifestyle. But the truth is, if it's not earning any interest, no, you can do way better than that. Uh, if you want to develop the habit of saving, I'm going to show you. I think I have already. Where I mentioned you pay yourself first. So if you want to, that is the right way to grow the habit of saving. You want to have this habit of, whenever you earn income, you take out the savings first and you put it out away. So once that habit is there, you don't have to keep using things that do not help you grow your wealth. Okay, for some weird reason, this is not coming up. Okay, all right. So okay, let's see if that is not broken. Okay, I can even come here and check for questions. So I think this solves the issue for me also. So then afterwards, once you started saving, you've gotten the habit of saving, then you need to also master the different investment options, right? So what are the different options you have, different investment vehicles you can tap into? So there's the bank fixed deposits, where you can negotiate a higher rate than the usual savings account rate, but comes with some withdrawal restrictions. So I've seen people walk up to their bank and ask for high yield interest deposit accounts, and typically what banks will push to you first are the fixed deposit ones, because they can decide to give you something less than money market rate, uh, but still higher than the savings account rates. And you don't, if you ask me, I the restrictions and the loss of the lower rate you will get compared to all these other options I'm going to mention are things that I think are too significant that I can't come up with a reason why you should, as an individual, want to go with a fixed deposit account with a bank. It's only companies that I know who are able to negotiate something really, really worth the stress of doing a fixed deposit with a bank. So, but that option exists, and for some of us, that's the first of the options we were able to uh, take advantage of before our eyes got to be opened to other investment vehicles, other investment options. Then there is treasury bills, right? So in Nigeria, government regularly, uh, you know, list bonds. Most of the time, the ones that are much more uh, like come up almost every month, they are the treasury bills, and they are the 91 days, 182 days, and the highest one is the 364 days. So the treasury bills, which are like short-term government bonds, right? They are a lot more popular here in Nigeria, and the good thing is the banks and some finance houses make it easy for you to even buy directly. So we call them secondary market sources, right? Because if you need to buy directly, buy into the listing, the primary market, there are some minimum rates that I think about 50 million naira that you will need, that can be prohibitive, but you can go through any bank and some finance houses to buy into those treasury bills. Uh, and you will be able to get almost close to the same rate as someone who bought on the primary market. So the treasury bills are things you can tap into. Then there's the money market funds. Personally, I prefer the money market funds over the fixed bank fixed deposit and the treasury bills. I prefer the money market funds because fewer restrictions. So with treasury bills, you have to the cycle, the maturity cycle is locked. If you put money in a 182 days treasury bill, you will have to wait to the end of that period to get your money back. So there is no, oh, I have an emergency, I need to use that money before that maturity date. But then with the money market funds, a lot of the mutual funds and finance houses that structure these money market funds, they give you that flexibility, right? And some don't even penalize you. I've used a couple. I've used ARM. I've used Meristem. I've used Investment One. I've used Stanbic IBTC. Uh, so far, I can't really say anyone really penalizes. The ones that I know that have a bit of a small, like restriction is, I think Stanbic has, and I can't remember any other one, but the restriction is this: when you open the account newly, they want you to at least leave it for a few, I think maybe not up to a month, maybe like 2 weeks before you can start making withdrawal requests, and which is not a very significant uh, withdrawal restriction. And that only, from, if I remember very well, is only when you
create the account. So it doesn't mean that once you start running the account, if you put in money today and you want to take the money out tomorrow, you start facing issues. I've not experienced one, and I've had situations where I put in money today and then the following week I'm taking from the money I've put in. The only thing I forfeit is the interest that could have accrued if I've left the money in there. So the money market funds are ones that I use because of those two flexibility or those two benefits in my own judgment. The fact that I can always access the capital if I have an emergency need or have something to do without having to wait to the end of the investment cycle, which is the advantage I see over the treasury bills part. And then the fact that the rate is higher than the fixed deposit and it's very similar to treasury bill. In fact, sincerely, you might be lucky that if you go with some of these very big money market funds uh, accounts, ones with I don't want to keep mentioning names, but you might be lucky that you might get even above the uh, treasury bills one because they are able to invest in commercial papers. They are able to invest in some of these companies and state bonds too, and those ones typically pay a bigger return than what the FGN, the federal government treasury bills, will pay. So that higher return is sometimes transferred to you, you know, net though net of their management fee. But I've seen cases where a money market fund is doing more yields, more return than the the yields on the treasury bills. Okay, so that's not guaranteed anyway. I'm just trying to defend why I pick it. And then also there is the equity fund. So for the equity fund, which is where also I'm also very active. The thing about the equity fund is that um, it's your money you put in can go up and it can go down, right? So there is that bit of we call it volatility, where where done something a bit wrong, where you can get a return on your investment, and on the other side you can lose even your capital. Maybe very rare, except you've done a very terrible one that you could lose everything. But if you keep monitoring, before you end up losing everything, you will have seen some of the signs. But the key thing is that risk exists there, right? And so with equity funds, you want to make sure that you thoroughly understand what you are going into so you don't panic and pull money once the thing goes down, just because you are not expecting it. So it's some of the things you have to build into your expectation that your money can go down just as much as it can go up. Okay, then there's the real estate. So real estate, you buy into real estate. This is a case of you buying into real estate for commercial purposes. Your plan is to buy the land to sell it later, to build a house so you can give it away on rental, have people live in it and pay you rent, or any commercial property that you're going to, not for your own personal use, but again for commercial purposes to make a return on your investment. So that is what I am summing up as the real estate portion. The thing is, the market is not structured here in Nigeria, and so you will do a lot more work than you in fact, compared to the amount of work I did in equities, I think so far of all of the investment I've done across all of these different types of investments, uh, the real estate is the one that was very stressful for me because I had to physically go and inspect the real estate property, which if it was equities, I don't have to physically go and inspect the company. I don't have to drive to somewhere. I don't have to. I can do all my checks uh, from where I am. And the other thing is also there are a lot of hidden charges. So there's a lot of agency fees. So there are so many things that eat into your supposed profit. So you see you want to buy a land, you even though the price of the land is say maybe uh, 2 million naira, and you have this confidence that it's going to rise to 3 million naira, which is another thing. if you are buying, the people you are buying for will always tell you it will rise. So they can always show you nice things, nice history of how it's been rising since 1995 or some. They have very catchy way of helping you, of making it like a no-brainer for you to do the investment, and they some even say you get 100% return on investment in 1 year, in 2 years. All those are not true. So the thing is, even if the property you bought for 2 million, which is the 2 million naira they advertise to you, you buy it, you pay some, additional fees in the paperwork, in the agency fee. You'll be fortunate if you don't pay more than 30% of the value of the property you bought on top, right? So it's usually more in the tune of between 10 and that kind of range. If you, especially if the property is a very low value one, you might end up paying just as much as what you paid for the land, just for the documentations and a whole lot of all those additional fees. So when you're actually selling it for the double the 2 million naira you bought it, you'll find out that because you spent maybe some extra 600,000 naira on the thing, and then you are selling for 3 million naira, right? And then again, they are still, if you are lucky to transfer all of the agency charges to the buyer anyway, you see that your gain is not as much as when you compare with the 2 million naira advertised and the 3 million naira you advertise. So sometimes you have to factor in those hidden costs. And the other thing about real estate is, um, the truth is, the market is not uniform, meaning there will be places where, maybe I'll try and show you some of the diggings I've done, and then you will see for yourself that there are properties that they are selling currently now, like land selling currently now, cheaper than what they were selling 4 years ago, 3 years ago, 2 years ago. And when I read the adverts that they used in advertising those properties 3, 4 years ago, they were saying it was going to give the buyers 100% return on investment in 1.5 years, and this is already 3 years. Instead of giving them a return on investment, it has even depreciated. Kind of, the price had come down below what whoever bought it that period had paid, and that is minus the additional overhead, the other cost that comes on top. So real estate is something that you don't want to read the hype, you don't want to read the adverts and base your judgment on that. And that, another thing I've seen, maybe um, I'm going to try and talk about the different ones that require a lot more explanation. So maybe the equities and the real estate. So and maybe the halts to the cryptocurrency. So let's just say I keep for now the extra things I want to say about the real estate, and I move on to the halt. So I'll come back to the equities. I'll come back to this real estate, and maybe I will also do a lot more here, right? So for the HOTS, any other investment vehicle that doesn't fit in this uh, fixed, this that doesn't fix here, that doesn't fit here, doesn't fit in the bank fixed deposit, doesn't fit into the treasury bills, doesn't fit into the money market funds. Those ones, and equities and real estate, those ones are what I bundle together as HOTS. So cryptocurrency, I've been in the cryptocurrency space since 2015, though I was not so active, so I missed out from the gains that happened there. But I have always been monitoring it, so I can tell you some of the realities there. And the thing is, I've made money on it also, so it's not like maybe I lost money there, even though I could have made a lot more. If But that's always like that. With the benefit of hindsight, everybody is an excellent investor. So that is not something that I can say it's a negative. Uh, so then also the crowdfunding, uh, which is becoming so popular that some people are beginning to treat them the same way they treat uh, these other very established investment vehicles. So for the crowdfunding ones, like the agri-based funding, I don't have anything against anyone, but then I have to say things as they are. So the common ones, there's the farm crowdy, there's the trival Greek. There are those ones that say they're going to buy vehicles for ride sharing for Uber, and then you will maybe with some other people put in money and co-own, and then there's so many of them in different versions, right? And I think I've also recently come across one around real estate where uh, they have this luxury real estate property like it's these high rise apartments, and then you cannot afford to buy any of the any of the apartments, but then you can pool money. So they have this pooled scheme where like 10 of you can own one flat. So you will be sharing the rental income that comes from it, but you can't control it. You might not even be able to know which is the flat you own. So there are many versions of this, and they are getting really, really, really popular. The thing is, don't ever confuse them for the already very established investment vehicles that are like treasury bills, money market, equities, real estate, because there is a lot of integrity risk, or what we call kind of default risk, where all your return is based on the fact that the body, the company that has built that scheme, uh, which is a bit very vague. You don't see the underlying thing. If I buy stocks through say any of these investment houses, so if I buy stocks through Stanbic or ARM or Meristem, if any of those companies go bankrupt, it doesn't affect my shares that I bought, because they are just like a broker. They are not the one that have structured investment, owned investment, you know, are in custody of the money, so there is no custody, there's no separate custodian. There's so many things wrong that uh, maybe wrong is a strong word to use, but there are so many things that should be a point of concern that you will want to factor as a risk. So you don't just blindly compare them with, oh, I put my money in money market, I get 12%, but then uh, crowdfunding scheme is promising me 18%, it's promising me 20%. You want to see it in the real light of what it is. The 12% and that 18% are not apples to apple comparison. That 12% that you're getting from money market or treasury bills is guaranteed, you know, especially treasury bills. Government can always print money to pay what they've bought. I mean, what they've issued, right? But then, company ABC that is, coming up with a crowdfunding scheme, and then you are promised so money. Anything can happen. Recently, Thomas Cook, uh, decades of, over a century old business, just went belly up with very short notice. They're into vacationing, into travels, and those things that people were stranded. So that means the short notice was, it came as a shock to everybody involved, right? So if a company is going to have a problem, you will not know until the problem has happened, and you'll probably be the last to know and no recourse. So you don't want to uh, not factor that when you are putting your money in those investment schemes. You don't want to go and put all of your investments spread across those kind of crowdfunding scheme. You can never tell. They are privately run companies. They don't show you all what is behind there. Some don't even have custodian schemes, so there's no one you can hold, right? And for you, all of the return that you've been getting, and then you're applying them back, they all go into smokes if that happen. I'm not saying it will happen. I'm just saying you want to be balanced in making your decisions. Everything is not tied to the rate of return, nominal anyway. There is always there is a risk factor to consider. And also, you want to have a well structured spread of your investments uh, money. You don't want to put all of your money into things that go down the same, go down or go up and down at the same time. Maybe I'll come to that later, right? But what I'm saying is that all the things I've put into these halts, uh, there are things that you don't want to put the majority of your investment money into. You don't want to put, if you are saving say 100,000 naira a month, uh, I don't expect you to put all of that 100,000 naira in the investments that I've classified as halts. Don't put them in these some of these fancy new um, uh, should I use the buzzword now, fintech companies that has, you know, except they are acting as a broker on your behalf, which means the example I gave regarding Meristem, ARM, and some of these established brokers, where they are helping you to buy something that is not owned by them, something that is a much more structured investment that, you know, if they have any use, it doesn't affect what you have put your money in. So that's what I mean. And there's FX trading. I don't have to say too much about that. Too many people have a lot of personal experience with that. That they, those who are able to do it know themselves, and those who have been burnt, repeatedly and understand that this is something beyond them also already know. The key thing is, no matter how very confident you are in your strategy and all of that, you don't want to put all of your investment money in this class of investment. Okay, so I'm going to try to check if there are questions awaiting me, since uh, the other method of me checking is disrupting. I will come here and check. I can use here to check. So any questions? So any questions? But I hope you are able to follow along with what I've done so far, because right now I'm going to switch to the practical side of how I I consider in making the decisions around the around this bottom three class of investments. Okay. So if you have any question, please again let me know. I am able to monitor the chat from where I am right now. Okay. So great. I want to go into the demonstration part for these bottom three uh, investment types. So I want to do a demonstration. So demonstration of those bottom three. Okay. This one. This once. Okay. All right. So equities, right? How do I make my decision on understanding that market? I know that not everything I say now can be directly used by everyone, because everybody is at different levels in their investment journey. But then I just want to share my practical experience in choosing, in making investment decisions around these equities, real estate, and then halts. Okay, for the upper level ones, for these ones in the upper level, these ones, things are a bit much more straightforward. So you have situations where people can walk into the bank and get all the information they need about these. You can contact your bank or any of the finance houses and get all the information you need about this also. And then for the money market fund, you can also get all the information you need from the fund manager. But for these one, two, three, there are a bit of some technique to how you get all the information that will be useful, that will be needful, that will be helpful in making the right decisions. Okay, so Oluwemimo has asked the question: wouldn't a commercial property count as a liability when costs such as maintenance and repairs are factored into it? A commercial, if you own a commercial property, which means property you renting out, you are leasing out, you'll be getting rental income. I don't think anybody who understands some level of math we want to, you won't want to rent your house or your property out at an amount that is less than what you use in fixing, in doing repairs, in doing maintenance on the house. So it's very difficult for you to now have a situation where the property you are renting out, uh, the rent you are getting on it is not enough to even cover the maintenance and repairs. That is a very unusual case. So what I've seen happen is this: um, people in structuring the income from their rental income, they try to separate the expenses on the maintenance and repairs. They try to separate. So let me give an instance. So if you've stayed in a serviced apartment, you will see that they will ask you for a base rental fee, and then the cost of them providing you power, the cost of them servicing some of the utilities you use, things like if it's an apartment that there's the AC, maybe there's the DSTV, there's some other facilities, they transfer that cost to you. Just that maybe if there are many uh, tenants in that facility, they can share the cost, which can now make it cheaper than when they have to be doing it themselves, or like individually the tenants have to be doing it. So that's the approach they use in making sure that they don't have to spend more than what they collect from the customer, from the tenant on the house. Okay, so another question. So Nello, what basically affects the fixed interest rate? In 2016, I got 12.5%, but now it's just 7.5%. For I guess you mean the fixed deposits, like fixed deposit one, right? So for the fixed deposit one, there's really nothing market wise that you can point to, because it's more of a private it's more of a privately determined rate. Each bank, in fact, the same bank that gives you at one rate can give to a different customer at a different rate. So uh, you won't know unless if maybe you have an insider in the bank and who is able to tell you that actually our bank can do up to this amount, up to this rate. If there's nobody telling you that, then you are just blind to, you just believe whatever they tell you. So if they tell you, sorry, the things are really bad now, the rates have come down, we can only do 6%, and just because you are talking to someone who maybe deliberately or indirectly is not telling you everything, you feel what they are telling you is what is applicable to everybody. But then you'll be surprised that someone else is getting a lot more than what you've been given in terms of rate. And it's even a general knowledge, because I've seen companies that opt to do fixed deposits rather than do treasury bill, because they are able to negotiate with the bank, you know, a rate that is even higher than what they will have gotten if they had gone purely into treasury bill. I don't want to mention names, but I even heard of the name of the bank, and I think that time they were having a bit of a money issue, that they wanted to get customer deposits at all cost. And then sometimes one way of incentivizing companies or people with a lot of money to put money in the bank was to promise them a rate that is higher than the market going rate. So it's a very privately determined rate, and though we all know that if the treasury rate is more like the mid rate, the benchmark rate, the things that if it goes down, pretty much every other thing in terms of the fixed income markets, they go down in tandem, and if it goes up, all the other rates go up. But how much up, or where you are in that whole up and down cycle, you know, it can be different for everyone and for different arrangements you have with the finance house and bank, especially for fixed deposits. Okay, so I hope I answered the question well. So let me quickly take us through my what I use in my day-to-day investment analysis, right? So I'm going to launch my Internet Explorer, no, Google Chrome, my browser, and then I'm going to start taking you through the different tools I use in, you know. So let's start with real estate, because that is where people are having a lot of interest, and sometimes I notice people making mistakes that can be avoided. So I'll show you how I go about my real estate decision making. Number one is I try to have an idea around what is happening generally in the markets, right? So I this Castles magazine, um, if you just go online and you type Castles magazine, they you would see that you can access their archive of magazine. They make a very comprehensive listing of real estate properties across Nigeria. Occasionally, you even see foreign listed properties that are sold by Nigerian agents. And what I do is I go one after the other. So let's say I start with the most recent. I download. Okay, so I download, and then I go through. So while that one is downloading, I can take you through another of the steps I take, which is I also go on Naira Land. So I go on Naira Land properties. If you have any question, please, I'm able to monitor now, and I can be able to answer your question. So I also go on Naira Land properties, right? And this is what I do. Uh, if I know that, so let's take for illustration now, I'm going to go for, I want to decide on a property to buy. What's the best choice of property and price in Ibejuleki? So that is one hot spot that is highly marketed these days. So that will make a very good case study for me to use. Okay. All right. So I'm going to say I want to evaluate Ibejuleki properties, right? So here is what I do. I come on Naira Land properties. I go through the listings that are for what I've said. So I'm going to type Ibeju Lekki. Okay. And then I start seeing the results of listings around that area. Okay. So you you see I've seen one for Hopewell Park Estates, 2.6 million. This was listed today. Uh, Royal Gardens Estate, 2.8. So you start seeing a lot of listings, huh? And very soon you start noticing, some listings that are showing repeatedly. So for some reasons, it might be easier to just take the patience and scroll through instead of the search one, because the search one can show you, we also show you the text inside, and that can be a bit laborious to go through. So I will, in the next 5 minutes, take you through my end to end. So this is what I do. I read through what is being there, and then anyone that looks like it's in that area I'm talking about, I'm interested in, I right click, open differently. Okay, this looks like that, so I open them differently in a separate window, and then let's look for a few more. This looks like Bejuleki. Let's go down a bit. This is definitely one. Let's check what this is. Okay, then this is another one. This is another one. Okay, so I've seen another question that's coming. I will answer that question in some minutes. All right, so this the person has listed the eminence court. Notice is in Bogije area in Ibejuleki. Let's see how much it is going for. They put the price. This person didn't put the price. So okay, the price is in the title. So the price is 4.5 million naira. Okay. All right. If you check this, so let's say just keep a mental note. Huh? If because of time I can't be writing, so I typically write them down. So I have a we have these Google Sheets that we keep the prices of. So see, so I have a team that gathers the price of all of these investment property by dates, name and all of that, the name of the estate, the property type, by the price, and then by dates, and you see they're working downwards. But just so, because this is confidential, we are not going to be able to give out this. This is things we are using to develop some real estate analysis product, so I can't give you this. So I'm just going to walk you through how you would have done it yourself. So I go through all of these listings that are currently this is Akodo 800,000 naira. Let's see what this one is for. This is 12.5 million naira for same land, but this is beside Amen Estates. So this is Eleko Road. Then let's see what this goes for. This is Brooklyn Court, 800,000 naira. Okay. Then let's see another one. This is Eminence Court. How much? This, I think this is what that person listed here again. So it's the same listing. I can, you know. This is where is this? Ibejuleki, you know, the far 800 700,000 naira. Then let's see what this goes for. This is again around the Amen Estates. The name of the property is Osana Gardens. Goes for 12 million naira. Okay, let's see what this goes for. So this goes for 5 million naira. This is the full plot. 5 million naira. The name of the estate is. So you see a lot more estates than, and that can help a lot in getting what I want to say, because you will now be able to go back a few years. So you see what I'm going to do now. So I'm going to now come here, hmm, and do slash. Uh, I go back, say 200. Sometimes I go a bit far. So let's say I go 700 pages back. So once I do this, I will see what the price was in, this is 2017. So when you open some of these, you start seeing the very same land that you are seeing the current price. So let's see if we will see some of the ones we've examined. You start seeing the very same land. You will see some of them have gone up, and you start noticing some pattern. You will notice land in a particular area in that same Ibejuleki. You will notice that there are some lands that have gone up like times two their price in the last 3 years, and then you will notice some that have been advertised at the same price for the last 4 years, and they will keep telling you it will go up 100% in in uh, in how many months, in half a in 1 year, in 18 months. So all those things are what you will want to use in your decision making, in choosing the area to pick. You don't want to buy land somewhere that there is a lot of vagueness. Nobody knows when the value will go up. And there are reasons. They say price as maybe not easy to explain as it is, but price will always reflect the reality. If something is good, it can't be depressed for too long. Even if it is not going in some crazy range, it will at least be moving up slowly. That's why you will notice that land in very established areas are always going up in value gradually. Land in Ikeja, in already developed places, in places that everybody knows for sure that okay, these places are great. They are still not hotspot, but the lands are growing in value gradually. And then you will notice that the places that are hotspot, which is where you want to be as an investor, the lands there they are growing faster than the ones in the already cooled off places. And then there is the category that I call the overhyped. So these are the different categories you will notice. There is the you know developed, uh, I call them cooled off. Uh, they are not being hyped as such. So places like even places you don't think of, even Iyanopaja, Ikeja, the main Lekki, places that are already developed that you can't be saying is because uh, they are just developing is why the prices will rise. So the prices always go up a bit, maybe not drastically. Then you have the places that are, you know, hotspots. Uh, Now, don't be deceived if people tell you the whole Ibejuleki is a hotspot. No, there are always pockets. So the places that are, from my own analysis, the places that are closer to Aja, so the places that are a lot closer to Aja, so Aja side, are great. Then the places that are also very close to the refinery, which I don't understand why. Someone says ordinarily it should be a health hazard to stay very close to the refinery. Again, those ones are very close. When I say refinery, like walking distance from the refinery kind of close. And then the other ones I've seen is the ones that are around the Amen estates. And I guess it's because Amen estate has been able to create that illusion of value that people are willing to pay very high for around that area. So when you when you go through all of those price history, you begin to see that in the whole bundle of Ibejuleki or any place you are looking at, you'll be seeing which places are the actual hotspot, the places experiencing price increase, the places where things have been going up as promised. And then there is the overhyped. Something has gone wrong with the screen. Okay, so there's the over okay, there's the overhyped anyway. I wanted to write that, but for some weird reason, the screen writing tool has gone off. So there's the overhyped, and you don't want to be in the overhyped. So that's my approach. This is 2017. I'll be able to pick some properties there and check what the prices were, you know, and then I go back also some years. So if I do this up to 1,700, then I'm able to see this is now 2015, and you'll be amazed when you use this approach how some land have stayed the same price for the last 4 years, how some have doubled, and how some have gone up gradually, and that will help you making the right decision. So that's one thing I do. And the other thing I do is I categorize the properties by title type. So there is the ones that have excision, the ones that have C of O, the ones that do not have any title. Anything that is like under processing, patent excision processing, um, anything you hear processing, just discard. They don't have it. Processing means they don't have it. So CFO is what you are looking for, governance consent. That means the land title is not one that will give you issue later on. Excision, it's still a bit, risky, because I've seen places where land has succession, but then there is problem relating to the owners. The Some people had bought it. A family said they had bought a large expanse. Another person has been sold it again. So you can never escape that just by buying one that has succession. The only thing you've escaped is government cannot um, say the land is under a reserved area. So it's only government that you have, somewhat just escape trouble with. But the thing is, even if government decides to do something there, you won't be able to get compensated if you are not able to get C of O for the land. So for me, I when I looked at all the prices, I saw that there is not, you know, there is no marked difference, no marked value, consistent value increase in you buying a land that does not have any title and then waiting for it to have a title. Because the truth is, it can take 5 years, 6 years, 8 years. Whereas the one that already has a title is gradually increasing in price. So what you are getting as one sudden jump in price, the one with a title has been gradually accumulating that value over a longer period. So I decided to settle for only C of O lands and ones with governor's consent. Okay, so that's another thing I did regarding that portion. And again, for stocks, what I do is I use a tool which is why I use it, because I built it using the knowledge of what I want to see, and then that was how I came up with what I should what I should do. Okay, so I'm trying to load it up. I think for some weird reason it's not coming up. So let me just reload. So while that comes up, I can also show you for the cryptocurrency I use so it's a phone app anyway. So I typically use the phone app, but then you can use investing.com to for the stocks one I use investing.com. For the cryptocurrency, what I typically do is I monitor the prices, and so you can see there's a crypto site section. You can be able to keep track of the key ones. So I limit myself to the major ones. So Bitcoin. I also used to do Ethereum, but right now I'm focusing more on just the Bitcoin. And the truth is that uh, I try to follow a lot of analysts on the cryptocurrency to understand even the things happening there. So what I do is whenever I see the price go down, I put in some bit of money in it, and then when it goes up, I hands off, and when it comes down again. So recently, I've been putting some bit of money in it. When it was also down to 5,000, I put some money in it, and when it went up, I got a lot of profit, and I had to. It was part of those profit I used in in buying a land somewhere. So that's my own strategy with the Bitcoin. I put in money that are not significant as ratio of my total investment. Uh, but then the let me just check if everything is still working fine with the recording. Okay, okay, yeah, things are still working fine. Okay, great. So I'm going to keep up with what I'm doing then. So that's my own strategy with the Bitcoin. I used to do forex, but I've stopped. I've stopped doing forex. It's Let me just check this part if this is also working fine. Okay, great. This is working fine. So I used to do forex, and then I stopped the forex. I wasn't making any headway. Whatever I make evaporates after some time. And what are the other things I have in the alt? I don't do any of all these crowdfunding, because somehow I would rather do equities than put my money in in funding platforms. Either I do equities or I plainly do money market. So for the stocks one, this is what I use in coming to my investment making decisions, right? So I identify the companies that are the major ones in the industries, different industries. So let's get this to come up so I can show you that part. I'm going to drop the link of this in the video. For some weird reasons, it's taking a long time for it to come up. I'm guessing maybe my the streaming is slowing down my internet and I can't do other things, I guess. So uh maybe in another session then I'll take us through the stocks one, huh? I'm going to for now just leave the link of what I use so you can be able to uh go through it at your own leisure, right? And then maybe when I do another webinar, I'll take you through my own stock investing decisions. So thank you. Any other questions for now? Okay, so I guess I'm going to have to switch off the session right now. Okay. So thank you very much. Enjoy the rest of the day.